This is Taylor Tuesday. Welcome back to our normal Tuesday videos. I am Leah.
And I am Mike.
And today we're going to talk to you about what happens when you get an accepted offer on a home.
Yeah, so you went out, you talked to the lenders, you got approved up to a certain amount, and you went and found the right place, and you got an accepted offer. So now what is next? It takes anywhere from 30 to 60 days to close on a property after you get an accepted offer, and 30 is more on the quicker side of the closing, and 60 is more pushed out. So average, you could say, is about 45 days to close on that property. There is some expenses that you will have before closing that will come out of pocket after you get an accepted offer. So some of those are going to be earnest money and an inspection. Earnest money is money that you put forth with your offer to show that you are serious about actually purchasing the property. If you have no money tied up in the deal with that offer, it's kind of like you could back out and it doesn't really hurt you or affect you at all. And it can kind of hurt the seller more so than anything. So it's typically 1% of the sales price. And like I said, it's just showing that you're serious about purchasing that property and that you want it.
Right. And then that earnest money is typically paid. You send your earnest money check 2 days. It's due 2 days after your accepted offer. 2 business days, right?
2 business days.
Then at that point, it will be held onto by the listing agent or the listing brokerage, and they will keep your earnest money safe until you get to the closing table.
Yep, and the earnest money does come back to you at the time of closing, so it'll either be applied to your closing costs or your down payment, depending on your situation. It'll go towards that at closing. There is a way that the earnest money could be forfeited to the sellers if your agent is not doing their part to protect you and your earnest money. If the deal fell through outside of, say, an inspection contingency or a mortgage contingency or a financing contingency, that's where your earnest money could be forfeited to the seller. But again, that's real estate agent's job to make sure that that's being protected and that doesn't happen.
Right. So next question that a lot of people have is, should I have an inspection? And we always recommend that you get an inspection and that you're contingent upon one. Inspections can be, like Mike said before, it's one of those other out-of-pocket costs that are associated with buying a home, but the $400 to $600 average dollars that you're paying for that inspection are very worth it to have a professional come through and give the home just a visual inspection all over. They take usually about 4 hours, somewhere around there, and just get together a list for you of like what kinds of maintenance might be associated with the property, or what types of things might need to be repaired, or even like how much life the furnace may or may not have left in it. Do you need to think about replacing that in the near future? So they'll answer questions like that for you. And then in addition to that, they'll usually be able to answer questions for if you have an FHA or a VA loan. There's usually higher requirements that the home needs to meet for those things. So like something like the height and width of the handrails on the stairs outside or something like that. They'll be able to kind of look those over and give you an idea of what types of things might need to be done in order to meet the requirements to pass the appraisal for those types of loans. And then essentially give you an idea of if you have some unexpected costs that you didn't plan for and you want to maybe negotiate, or if all is well and you want to move forward with the deal, then you and your realtor will discuss whatever comes up and make that decision together.
And like Leah was saying, it's definitely recommended that you get an inspection. The last thing you want is to not get one and then end up having some $5,000 repair come up after you move in that you weren't expecting. So that wouldn't probably make you very happy. So that's why we say paying the $400 to $500 up front is definitely worth it.
Mm-hmm, absolutely.
So next is about the appraisal. So an appraisal is something that the bank will order. If you're paying cash for a property, you will not need an appraisal. The bank will order the appraisal once you kind of get through the inspection and figure that out, and they will perform that. And appraisal is just what the bank does to verify that they're not loaning on the home and that the home's value is where it should be. They don't want to be stuck with an unsaleable asset if the buyer defaults on the loan. And so they just make sure that the value is where it should be and you're not overpaying for the property. If, however, the appraisal does come back low, that does happen, especially in this market with the prices being so high and everything getting into multiple offers and getting a bit above, list price. we do have appraisal issues, and there's a few different things that we can do about that. What are some of those?
Yeah, so there's typically 3 different options. One of those options is if your appraisal is coming in lower than the purchase price, you can choose to cover the difference in cash. So that's extra cash that you're bringing to the table that instead of being tied up in your mortgage, it'll be cash that you bring to the closing table. Another option is that you can negotiate with the sellers and see if they'd be willing to bring their purchase price down to meet where the appraisal came in so that you're not paying any extra cash there, and the mortgage will cover the entire cost of the home, aside from the down payment, of course. And then the third option is just a combination of the two. If they're willing to negotiate a little bit on the purchase price and come down a little bit to meet closer to the appraisal amount, and then you pay the rest of that difference in cash, you bring that cash to the closing table again. So there's some options there. You don't have to absolutely give up the deal just because your appraisal didn't come through, and it's definitely worth talking through if that's the case for you. But
there is a couple different appraisals as well. So FHA and VA, what we were kind of getting into a little bit earlier. FHA appraisals, which is also called an FHA or a VA inspection, is just with FHA and VA loans, there's a certain level of guidelines like handrails or something on the stairs, or just making sure that the house doesn't have busted windows all over the place or peeling paint everywhere. Those are appraisers that'll go in, make sure that everything's up to code where they should be for their lending guidelines. And if they're not, that's where they may request that those things be repaired or certain things happen before they do loan on that property. So that's just what the FHA and VA appraisal is. If you have a conventional type of financing, then the appraisal is more straightforward. They're not going to require anything to be repaired or anything like that. They'll just go in and make sure that the value is where it should be, and that's about it.
And one thing to note too is that sometimes you'll see that some sellers won't accept any FHA or VA loans for or offers on their home, because essentially they just don't want to go through the appraisal process with FHA because they're afraid. With the FHA appraisal, that appraisal sticks with that house for 4 months. So if the FHA appraisal comes in lower than they're hoping for on their whatever their asking price is, then they're kind of stuck with that, and the next buyer that comes in that maybe wants to try to buy their home, if that first deal fell through, they're still stuck with that FHA appraisal again for that next 4 months. So it's just something to be aware of. It is a little bit trickier to find sellers who are willing to accept FHA, but it definitely happens. And of course, it's just for the safety, or for your safety as the person living in the home, but also for the reassurance of the people that are loaning the money to you. They're government-backed loans, so they just have those higher requirements.
Yep. So those are the 3 big things: is the inspection, and then the earnest money, and the appraisal are big parts after you get an accepted offer. And then once you go through those things, you will get sent to final underwriting from the lenders. So the people involved throughout the whole process are going to be real estate agents. The buyers and sellers will talk to their agents, and that's where the negotiations will happen. And then there will be title companies, and the lenders, like I said, are involved as well. And so then once you go through the inspection, you'll have the appraisal, you'll get sent to final underwriting, which is the bank just verifying all the information you've given them, making sure that the appraisal came back and that's all good. And they'll just verify everything you have and make sure that you're clear to close and that your loan is in good standing and you're good to go.
Yeah, absolutely. It's once you get that clear to close, it's a good feeling and you're ready to go.
That's where you then get your keys once you close, and then you'll move in and you'll be all good.
Yeah, but don't get discouraged if something comes up. Sometimes there's just like one piece of information that they're missing or something like that. So always pay attention to your email if somebody's asking you for additional information from the lender or the title company, whatever it might be. Make sure those documents get sent out, and also be aware of wire fraud. Don't let somebody who's not your lender or title company ask for your information. But definitely just pay attention and work efficiently to get all the information that you need, and you'll get clear to close eventually. And hopefully no delays on closing. So
absolutely. And then there is also a lot of
questions.
Yeah, people don't always understand when their first mortgage payment is actually due. And so it really depends. So say it's December 15th today. So if you were to close on a property on December 30th, then it would be your payments due after the first full month. So your payment would then, you'd have all of January, and your payment would be due on February 1st. But if you were to close on January 2nd, then you would have all of January, and then February would be your first full month, and so your payment wouldn't actually be due until March 1st, which gives you essentially 2 months of free living.
Yeah, and that's definitely something to keep in mind for those of you who rent and have a lease. A lot of people think that they need to start looking for a home when they're about a month or two out from their lease ending, and usually you want to start a lot sooner than that. For however long it takes you to find a home, and then on top of that, the 30 to 60 days to close, and then your mortgage payment won't start for until your first full month. So that buys you some time to still have your lease before it ends and move all of your belongings into your new home before your lease ends after you close on the house. So it gives you some time for like a nice transition, and then you're not worrying about where you're going to live in the meantime before you close, and you're not worried about breaking your lease because you accidentally didn't give them enough notice or something like that. So just something to keep in mind with your timeline.
And there is some options too. It doesn't always have to be a 30 to 60 day close. The sellers might be flexible and want out in 5 months or something, and that might line up perfectly for your situation. So it really all depends on just what you negotiate and what you decide with the sellers on when you'd like to move in.
Absolutely. And all of those terms will be agreed upon when you make the offer. So you'll know those from the start after your offer is accepted. So,
which real estate agents like ourselves will go through the entire process with you, answer any questions, make it really as smooth as possible. So
yeah, we're really here to guide you through the process.
Yeah, so this is just after an accepted offer, this is what happens. So the big things, just earnest money. You're going to submit your earnest money within 2 business days after the accepted offer, and then you'll have an inspection. You'll order that, make sure everything's good on that end, and then the bank will have the appraisal get ordered, and you'll make sure that the value of the house is where it should be, and then from there, final underwriting and to closing.
Yeah. Just looking at some of our comments here, and thanks Nolan for watching. I know we're sideways, but we're on a phone because my computer wouldn't work and we couldn't both fit in the screen very easily. So I'm sorry everyone that you either had to crane your neck or turn your technology sideways. Yeah, I think that answers all the questions about what to do when you close on a home or when your offer is accepted. And if you have additional questions, please make sure to drop them in the comments. We'll answer them there. Or if you have additional ideas for topics for Tailored Tuesday, we do this every Tuesday. We're constantly giving you good information, all real estate related and all really good. So make sure you tune in every Tuesday at 10 a.m. to hear all of our wonderful expertise.
And as always, if you're looking to buy, sell, or invest in real estate, make sure to reach out to someone on our team or Leah or myself individually. Our emails are in the description as well.
Yes, everybody on our team is always their first name at tailoredrealtyteam.com. So have a good day.
Thank you for watching.
Don't forget to tune in next Tuesday.